Hey, I'm Adam Jusko from ProudMoney.com. In this video, I'm going to tell you why I say beware of 0% deferred financing offers on credit cards or other financing offers. But before I do that, I would ask you to please subscribe to our YouTube channel if you have not already. And if you have already, I thank you for doing so. So many times when you make large purchases at retail stores, in particular, if it's jewelry, furniture, appliances, big electronics purchases, those retail stores are going to offer you 0% financing, which basically means they will let you spread out your payments over time and you don't have to pay any interest on them, provided that you pay off the complete balance within a specified period of time. So that might be 6 months, it might be 12 months, it might be 18 months, it might be 24 months. Sometimes it's even longer than that if you, have made a particularly large purchase. Now, on the surface, these obviously sound like they can be a great way for you to spread out a large purchase that maybe it is difficult to make all at once without having to pay any interest and just pay it off over this period of time. And it actually can be a great offer provided that you do actually pay off your complete balance of the purchase within that period of time that is specified. However, what you often are going to see with these offers is that they are something called deferred interest. Now, it's really more of an industry term than anything that you are going to see mentioned in any of the paperwork or things online when you make these large purchases. But basically what deferred interest means is they're going to give you that 0% interest rate, but what you're going to see in the fine print, or maybe not even the fine print, a lot of times it's right up front, they're going to give you that 0% interest rate on the purchases that you make, but what it tells you is that you must pay off the complete purchase within that promotional period, or what happens is you get charged all of the interest that would have accrued from the very first day that you made the purchase, as if the 0% offer had really never even existed. Now, sort of logically, when you would look at a 0% offer, you would think to yourself, okay, well, if I make this large purchase and I got, 12 months or 18 months to do it, if I only pay off 90% of it, well, okay, well, maybe I'll pay a little bit of interest on that last $50 or $100 or whatever it is. That's how you might think it would work, but that is hardly ever how it really does work in practice. When you have one of these deferred interest offers, you must read to see if it is a deferred interest offer, because if you don't pay it off in time, you're going to pay all of the interest from the date of purchase as if that 0% offer had never existed. Now, I'll use an example to give you just to make you see what I'm talking about. And I don't mean to necessarily pick on any one company, but I'm going to anyway because I think it's really not a very nice practice that they do. So I will pick on Best Buy in this particular instance. The Best Buy credit card, as of the making of this video, I looked online. They have various offers where you can get 0% financing for 6 months, 12 months, 24 months, maybe something else as well. In particular, one of the offers that they had was 0% for 24 months on home theater purchases of maybe $800 or more, something like that. So let's say that you make a purchase, a home theater purchase at Best Buy, and it comes to, it's a TV and speakers and whatever else, and it comes to $1,000, just to use a round number. So you got 24 months to pay it. Say you get all the way to the end of that 24 months and you have paid off $950 of it. You only have $50 left, but you don't pay off that last $50 in time to meet that 24-month window, and so you've got $50 that you still have to pay. Well, what's going to happen is, because you didn't pay it off completely within that 24-month period, you're not just going to pay interest on that $50 that you didn't pay off. You're going to pay off you're now going to have all the interest that would have accrued from that purchase you made 2 years ago is all going to be put on there at one time. And because store credit cards have really terrible interest rates, in this case, Best Buy's interest rate is 26.99%. As of the making of this video, what that means is all of a sudden $500+ are going to be put on your balance, and you are now going to owe all of that interest, which would have been over $500 over that 2-year period. So all of a sudden, what was a $1,000 purchase 2 years ago now becomes an over $1,500 purchase when all of that interest is tacked on. So you have to be very careful to watch out for those deferred interest things. When you see a 0% offer, it sounds great and it can be great, but you have to make sure that you pay off your complete balances before the end of those promotional periods. Otherwise, you're going to get socked with a ton of extra interest. So that's it. Thanks for watching. Please go to ProudMoney.com where we do credit card reviews and personal finance news and all sorts of other fun stuff too. Thanks for watching. Bye.